Hi, this is Joseph. It's Wednesday. It's August 11th, 2021, and this is a performance update for the Forex Automated Trade Signal Service. So the two trades that I'm going to show you today, there was actually a total of three trades. The third trade was in the opposite direction, and it was in the opposite direction of the two trades here, one being the pound dollar, and then the other one, the euro dollar. So with the two trades that I'm going to show you here, the total profits 75 pips, total $750 with one standard lot. One standard lot executed here on the pound dollar, one standard lot executed on the euro dollar. That resulted in approximately $750. That does not include the profits from the dollar yen. The dollar yen was a relatively short trade. It was about 22 pips. That was in the opposite direction. I want to show you how I was able to determine that this was going to be, or likely to turn out to be, some kind of a reversal, and that today's trading action was going to likely be to the upside. Obviously, I don't have confirmation until I see everything unfolding and developing the way I need it to here, according to the trading system that I'm using with the point and figure. Point and figure is always going to give me an entry, and it's always going to give me my take profit targets. I always want to have a conservative first target based on the amount of data that I have, and then I always want to have a second or possibly even a third target if there's enough data to justify that. Sometimes at the initial point of entry and the first target, the only data that I really have is when the trade initially sets up. And if I'm going to get a second target, very often if it's going to be much further and the trend's going to continue, it's going to be because price eventually settles after a few hours of rallying in one particular direction, and then it'll go sideways into and form a new range of consolidation, sort of a pause, and then it'll break out and move up higher. And that will give me another range of consolidation that I can use that data and calculate a much further target. That's how we acquire these targets that unfold as a trend develops. Again, sometimes I have to wait until I hit the first target or I'm in a trade and then it starts to go sideways to find further targets. Other times I'll have all the data that I need within the initial setup to find both the first, second, and possibly even a third target. So this one here was an entry at 21. The first target was 33. It was relatively short. So I always say when you're actively hands-on managing a trade, you can set your targets at, let's say, or an alert at 31, and you can pretty much confirm that things are likely to continue to move in the direction that you would expect them to. I want to show you how I was able to find this reversal. And the reason that I'm sharing all this is that I think it's really important if you're going to use a trade copier, whether it's an automated system, like a black box system is what they used to refer to them as, or a legitimate real human, a real trader actually executing these trades. You want to know if that person, number one, has enough experience to be trading. You also want to know what kind of trading system are they using? Do they know how to handle it? Do they know how to find targets? What's their stop loss? Do they find trades that are like, 1-to-1, 2-to-1? I mean, everybody has a different idea of what they would like to see. So I think it's very important that you understand the trading system behind whatever it is that's going to generate those profits for you if you're going to use a trade copier service. So again, this final trade here, based on this breakout right here to the reversal, I'll show you again how I was able to confirm this. The second target, the final target here in this initial move was 68. It was 1.3868 for a total of 46 pips. So 46 pips. The euro dollar that I'm going to show you paid 29 pips. So the total profit between just these two trades again was 75 pips for a total of $750 with these two trades, just these two trades alone. Good trading day, nothing wrong with it. Everything worked just as we expected, very smooth. But again, let me show you the reversal. So this was right around the London Open. Very often, but not in every case, I could anticipate or look for clues or signs that there's going to be some kind of a reversal. Sometimes price will start to move down a little bit lower and then pause, afterwards, sort of baiting people to the downside. This was in a previous trend. As you may remember, last week we traded non-farm payrolls right here, and I waited for that sort of blip to the upside, the way it reacted, and then it kind of came crashing down, and there was my entry, and I traded it down to these targets here. Again, this is relatively easy to do if you're patient and you know how to read the charts. How do I read the charts? So I start off here with a bar chart or a candlestick chart. So this is everything that I did this morning when I started trading just prior to the London Open. So this is a 30-minute time frame on the pound. And you'll notice here that we had this move to the downside and things started to sort of flatten out here. We've got the London Open right around here where I'm moving my cursor. Again, this is a 30-minute chart. It starts to move down. There's quite a bit of activity in that one particular 30-minute candle. more volume stepping in back here, but it really doesn't go too far if we start looking at some of these other significant support levels. So I can see that things are, they're starting to create that divergence between how far price or the activity and volume. So how far is price going? If there's a lot of volume, if it's not going very far, if it's not, there's not much of a result in terms of the amount of effort that it takes to actually create all of this activity in that 30-minute bar. So things started to slow down here at this point. Again, knowing that in very many cases, a lot of instances, I don't want to say in every situation because I know somebody will watch this and go, okay, that doesn't happen every day, because it doesn't. It does not happen every day that we get a major reversal or a complete reversal at the London Open. But I know that it happens often enough to be able to anticipate and watch this kind of behavior. So again, counting the waves, I refer to it as counting the waves. So I'm counting these downswings, these upswings, downswings, upswings, downswings, along with the volume. It's the volume that I'm counting. And I can see, again, the divergence. I'm also looking at the range of these bars. And again, noticing how far price, this was the final one. So this is going to give you a pretty good example of what I'm talking about. How far price closes away from support if it's in a downtrend with a lot of volume or activity. In this case, it doesn't do anything. It just sort of dips down, comes right back up, and closes above that resistance. So this was the beginning phases, along with this candle right here, of my expectation that we were likely to see some kind of reversal and a turnaround. In other words, an uptrend for the day instead of the downtrend that we've consistently seen since non-farm payrolls. So again, this candle right here sets the whole thing up. It really depends. There isn't one particular time frame that fits every situation and every scenario. Today, it was just easy to see it on the 30-minute and the 1-hour chart. I was also able to see it on a 15-minute chart. Sometimes the 5-minute chart is actually the best time frame for me to be trading. It really depends on how the market's reacting, how traders are reacting to that day trading opportunity, that 1 week, or I'm sorry, that particular hour at the open, or maybe the next 2 hours after some news. It really depends. It's always going to change. So you want to go through the different time frames. That's what I do. I go through the 5, I go through the 15, the 30-minute, and the 1-hour chart as I'm day trading. These are day trades. So what I'm doing is not necessarily holding overnight or through the weekend. I certainly don't want to hold a trade through the weekend. But I expect to get in and out of these trades usually within the same trading session, if not perhaps the following trading session. So if I did get an entry during the London session, sometimes it'll flatten out, go sideways a little bit, but I'm still profitable, and I have to wait for the New York session before price really runs right into that final target and I can close out the trade. So again, this is where everything starts. It starts either with a bar chart or a candlestick chart. I use volume. I count the waves. I'm looking for, again, analyzing these phases of consolidation. These videos are on my YouTube channel where I'm analyzing these phases of consolidation. It could be accumulation or distribution, regardless. I'm still going to analyze them in the same phases, and it's in phase C and phase D that I prefer to find my entry. When I find and classify the different stages of these phases of consolidation, I then go back to, and I have this side by side, my point and figure, and I wait for the entry. So the entry, again, let me go ahead and open this up. Here we are this morning at 1.3821. First target was 33, but it was pretty obvious that it was going to continue to blow right through that. Again, I'm hands-on. I'm manually closing these trades and opening these trades and managing these trades, each and every single one of them. And based on the data that I have here, here was my second target at 68. It did okay. Again, if it was likely to continue and we didn't see such a significant retracement, I probably would have held on to it a little bit longer, but again, I closed out the trade here at 68 because I could see that it really didn't have enough momentum at that time, but perhaps later on it could have, so it was safer just to lock in the trades. Again, these are day trades. If this was a longer term position, then I probably would have sat through all of this activity and I'd be sitting up here at 38.80 or a little bit higher than that. 93 is the next count depending on whether or not it continues to go higher, and I hit based on the data, and I hit that final target up there based on the data that I have here with these different columns. I'm counting the columns and then multiplying that by how I construct this chart. That's how I use point and figure. And I use point and figure for everything that I trade. So let me quickly show you the euro dollar. And this is the euro dollar, basically the same time frame. It's mimicking a 30-minute to a 1-hour chart. Here's my entry at 1.1718. You can see that the structure here is a little bit different than what we were looking at on the pound dollar. So this gave me a pretty good run up as soon as it gave me my entry. Significant retracement, I expect that. It doesn't always happen, but for the most part, from the time I'm in these trades, I'm in profitability if the timing is done correctly, and the timing is done correctly based on the point and figure. The change in volatility based on how I constructed this chart, will then give me my entry and then allow me to calculate my take profit levels. My target was here at 47, 1.1747. That was my first target, and that paid approximately 29 pips from the entry to that final target. So a total, just between these two trades that I've shown you so far, was 75 pips. That does not include the dollar yen. The dollar yen was a winning trade, but between these two trades alone, it was $750. I recommend that all of the people that use my Trade Copier service have the ability to execute or use a standard lot with each one of the trades that I open up. Sometimes we're going to have 2 trades open. Sometimes we're going to have 3 trades open. Sometimes it's just going to be 1 trade open. Very often it's going to be 1, possibly 2 trades open at the same time. You can adjust the Trade Copier. If you do not want it to execute more than 1 trade at a time, you can set up the Trade Copier to only execute 1 trade at a time, and it won't open up the next trade until the first trade for you has been closed. Or you could just choose to participate in all of the trades. If you have sufficient capital, you can choose to participate in all the trades. Again, I recommend that you have the ability to use a standard lot. Again, standard lots, just this trade alone with a total of 29 pips is $290. If you're going to justify paying a signal service, you want to be able to pay it every single month so that way you're generating profits and you're making money even without executing any trades your own. All of this can be taking place while you're sleeping or you're at work. This is a great way to grow your trading account without having to worry about making mistakes and not having, or wanting to spend a lot of money on coaching or learning how to trade. You'll eventually get my trading system and understand how it is that I trade. My subscribers use this service for years and years and years. I don't have too many subscribers that just use it once and then stop unless for whatever reason they get out of the business. Most of my subscribers that use this particular service use this service year after year. A lot of them will leave the funds in your account and let it roll over, and then they'll increase the number of lots as time goes on. Other people withdraw their profits at the end of every month. Either way, it's all up to you. Again, the only recommendation is that I would really like to see people that get into this service execute a standard lot. I do have a few subscribers that execute a half standard lot, but they're still making enough profitability at the end of the month to justify paying for the signal service. That's the key to the whole thing. You want to experience long-term growth. You want money constantly coming in month after month that you can count on, and this is the only way to do it. Find a trader that's got the experience that you need to be able to perform like this and produce results like this. Well over 10,000 pips a year if you use this service. That's a really healthy return. 10,000 pips on average with $10 a point approximately, or per pip, you're looking at $100,000 a year minimum. Usually I do a lot more than 10,000 pips per year with this particular service. There are really fantastic opportunities that sometimes develop at the same time. Sometimes I just have to wait. I might get a euro-dollar trade fire off, in 1 hour, and then I will wait 4 or 5 hours later, and maybe I'll see a trade on the pound-dollar. That's a possibility. Or like today, I had trades pretty much at the same time with the euro-dollar and the pound-dollar and the dollar-yen. Thanks for watching. If you're interested in having somebody trade for you, you're more than welcome to go to my website, check out the website, get onto my email list so that way you can get the updates. And you're going to get instant updates. I send them out at the end of every day for all the people that are interested in the service, and that way you can make a really good qualified decision as to whether or not this is a service that would actually help you get the results that you're looking for.